Understanding reversal candlestick patterns is one of the biggest game changers in trading. Why? Because the market is only going to do one of three things. It's either going to go up, go down, or go sideways. Okay, and so if you can start to see a reversal coming, then you're already ahead of the curve. Now, trust me, this is one of the tools that can take you from guessing to trading with purpose. Okay, so let's get into it. Trading trends is cool and all, but we all know that trends don't last forever. At some point, things are going to reverse. We're going to have a pullback. And if you're not watching for those patterns, then you can find yourself either holding the bag or even worse, jumping in too early or too late. Reversal candlestick patterns are powerful because they give you clues that something big is about to shift. And let's not overcomplicate this. You don't have to memorize 12 charts, okay? We'll save that stress for another day. You just need to know the basics, what to look for and how to trade it. And that's what we're going to get into today. So let's break it down the way I wish somebody would have done when I was starting out with trading patterns. You can categorize reversal candlestick patterns by the number of days that it takes for the pattern to form, the number of days or the number of candlesticks it takes. So you have 1 day patterns. Look for something like a doji candle, and that's when the candlestick is really thin and it has long upper and lower wicks. That shows indecision, and it basically screams that something is about to shift. Or you can look for the hammer candle, and that's where the body is small, but the wick is long. And that's usually going to be a sign of reversal in momentum. Now, here's a tip. The magic with these 1 day patterns is going to come when you see them at key support and resistance levels. It just works. Now you have your 2 day patterns. For these, you want to keep an eye out for the engulfing pattern. Okay, so a bullish engulfing pattern, that shows that buyers are in control. And when you see a bearish engulfing pattern, then it's basically like sellers are taking over the game. And what's really cool about these is that they're really easy to see. And they're usually going to happen when a trend is about to reverse. Then you have your 3 or more day patterns. And these are going to be patterns like the morning star or the evening star. And it takes a few different candlesticks to form, but they're really reliable when you want to call for a trend reversal. Generally, you want to watch for these when you're already seeing some exhaustion in the price, like the momentum is slowing down and the trend is starting to lose steam. So here's the key. Seeing these reversal patterns is a part of the game. Now, to actually trade them, you want to do one of a few things. First, wait for confirmation. Okay, you never want to just jump in as soon as you see a doji candle on your chart. Always wait for that next candle to form for your confirmation in the direction. Then also use volume as a backup. Is the volume supporting that move or is it a little bit weak? So for example, picture this. If you see